Going over the trade that I took today, and on top of that, and a little bit into the strategy that I used to hit on it. I did smack on shorts on NASDAQ today, and it was fucking fat. I actually had tried twice. The first one I took, I got stopped out around here. So I got stopped out, lost a little bit, maybe like 400. And then the next trade, I went ahead and actually fucking banged. That one I made all that 400 back, 700 on top of that. So here it is, very simple. I trade liquidity sweeps based off of ERLs and IRLs, right? IRLs is often known as fair value gap. ERLs being obviously high/low liquidity. Very simple. I mean, you can even see it right here. I'm going to show you real quick. Look this trade right here, right? I got in right here. My stop loss was right here. And my take profit was right here. Right here at this wick. Right? Now move this down so it's actually accurate. So this is the trade I took. It was a pretty good trade. I fucking smacked. It fucking kept dumping, honestly, and it's in a range. It's gonna most likely pump soon. But this is how I smacked it, right? So what did I do? What did I do to make this trade and make the money that I made today? Well, I'll go ahead and delete this for now. Like I said, I go based off of ERLs and IRLs. So what I do is I'll go on the higher time frames, not too high, not like the hourly, but I'll go on like the 15 or 30 minute. Let's say the 30 minute for this example, right? And I'll mark out recent rejections, right? You could see that we had a lot of liquidity here, and then we had, obviously there's a fair value gap here, and there's also a wick right here, right? So this is the top of the fair value gap, right? So I'll go ahead and mark that. Where's my fucking tool? Go ahead and mark any significant levels, right? Obviously, you know, places like this, right? Whatever. So let's switch back down to the 5 minute. You can see the reason that I went right here, right? And I marked it down over here. You see what happened here. Keep in mind that it was this area right here, and I'm gonna mark it with its vertical line so we can kind of see. This is where we were in, right? And so you can see what happened is what we came, we rejected, we didn't even fill this gap, right? And honestly, this, by the way, this is a fair value gap, right? IRL. So we didn't fill it, we rejected it, and we came back up. Now I'm looking for an entry for the shorts, right? Because obviously we're in a bearish trend, right? We're in a bearish downtrend, and we're probably gonna fill the gap, right? So how can we look for this? Again, so we marked out our ERLs, right? And now we look for the IRL. We want to look for a fair value gap that we can enter into to catch the shorts down. Go off of this wick right here to this wick right here. Reject, right? This is where we're looking for shorts. We're looking for an entry. And we actually would have, you know, we could have two. Okay, we can go, okay, if this one fails, right? Could have marked this one out too. Let's just say for reference sake, right? If this one fails, we have a second one to go for. Come down, we haven't touched it yet. This is where I got into this trade, right? We tapped into it. What happens automatically, right? As soon as we tapped into this one, I went short. So, we got into this short, right there. I had my stop loss above the fair value gap, and my take profit at close to the nearest, the lowest swing point, right? Which would be this rejection down here. I honestly was conservative. I could have written it down, right? I could have waited for the sweep, but I really just, just didn't want to do that. So, wanted to go ahead and make my money quick, and it still played out. What is like a 1 to 4 risk to reward ratio? It's not bad, right? So, look, we came into it, we rejected, and what happened? We fucking dumped. Luckily, I got out right here. It took profit. Because then a Drake candle came right after and fucking smacked everybody before it continued. But that's basically it. Super simple. I go based off of liquidity. I go based off of IRLs and ERLs, right? ERLs is just for my levels and for manipulation of liquidity sweeps. But my fair value gaps, I either enter off of them or I look to trade up or down to one of them. There you go.